Welcome to this video. It's Sunday, 23rd of July. Going to be looking at a couple of trade setups today. We're going to be looking at Euro USD, Euro JPY, moving to the charts in a moment. I'll be discussing not just the technical levels, but also big fundamentals that will be driving the charts, and also the sentiment of traders. Also using my favourite tool in Forex trading, particularly on Euro JPY, CFTC. Net traders positions. For those of you unfamiliar with it, you can check out more about it on the video link beneath this video. Also, for beginners, when I finished with the charts, I'm going to go through expected value of payouts, okay, and probability in relation to this. And a lot of traders who come in the markets don't understand expected payouts, asymmetric risk, etc. If you're serious about Forex trading, you need to understand. Why? Because it will make your trading a lot easier and make taking losers a lot easier as well. We all know that most traders are risk averse, just don't like taking their losses. So that'll come up a little bit later for beginners. But let's move to the charts and let's start, well, first of all, with Euro USD. So USD monthly chart, just very quickly before we get to the daily chart, just slight look at the bigger time frame so you can really clearly see the trend and this nice bullish euro uptrend. Now, before we just look at some big levels on the chart, I just want to draw your attention to this fact at the top, which is the US dollar 4.5% undervalued on yield differentials against other major currencies. Now, that's from the beginning of last week. It's got worse. Big undervaluations like this just historically don't last, but they come into place obviously because of investor sentiment. And investor sentiment is a very bullish euro, bearish of the dollar. ECB obviously expected to cut stimulus and raise rates by year end. They've actually denied they're going to do this and pointed to the reasons why. Market just simply isn't believing them. Push the euro up. The other side, the Fed are expected to hold rates but reduce the balance sheet. The Fed are obviously coming up this week. Now, in terms of the Fed, what can we expect from them? Well, I think obviously no interest rate rise. I would expect a very cautious Janet Yellen on interest rate rises. I think she'll be dovish, okay? But they have said, and Yellen said this herself, they want to reduce the balance sheet and reduce it quickly. And this could be the trigger for a dollar rally, not just on the euro. Reducing the balance sheet is effectively quantitative tightening. So it's basically like an interest rate rise. But a lot of economists don't see it as an interest rate rise, which I find kind of odd. But it is. So I think, market very bullish of the euro, very bearish of the dollar. Where are the big levels? Well, let's go here, and we're heading for 117. Okay, can we get there? Yeah, of course we can. We're pretty close now. Can we get above the level? Yeah, I think so. If we do get above the level, though, I think the euro rally is on borrowed time. A lot of people are saying it could go up to 121, and if you look from a pure technical perspective, okay, these two bodies, they are the next resistance level up. Of course, anything's possible. I just don't think we'll get there. I think 118 could get there. I just don't see too much more euro strength. More now, obviously, alert for the euro to weaken a little bit. How far could we go down? Well, it is a really nice rally. Market very, very bullish of the euro sentiment. So I think we're going to see a decent downside break. I will be kind of aiming for this breakout point here, okay? You can see, these candle body, that candle body, tail, 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 body, tail, and then the breakout. So I would say down towards there. So probably about 109. Sorry, I can't draw a straight line. There we go. Down towards possibly 109.50. Obviously, we have to see how things pan out. But let's just go over to the daily chart and look at some possible levels of entry on the shorter time frame. USD daily chart. Obviously, when I was doing the monthly chart, that's just the big levels. And obviously, that level of support I picked out is a long way from the price down at the 109.50 level. Plenty of levels of support in between that have to be taken out or we can target if we're euro bearish. But just go look at them in a moment. But first of all, nice rally up as we've seen, sitting below 117. Key a monthly resistance, goes through 117.30. Let's say I'd sell it back through 116.70. So look for the breakout to fail. Don't want to come too early and just assume the 117 level will hold. Like I said, we could even go up to 118, but if we do, I'll do another video. Right, if we don't rally, where could we go? That's the first level of support through this candle high here. It's very close to the round number, so let it get cleared out. Always leave 30 pips. So coming at 115.70. Now, in terms of where's the next level of support, where's the real key support? Normally you're looking for the 20-day moving average to be really good support. I don't think it's obviously going to snake up as if price comes down. I don't think it's going to provide much support. The real big level of support for us, and you can see it if you look at the volumes and what institutions were doing, is down at 114. Sold off through the round number, okay, settled on it, and then the next day what you get is big buying come in and push her up. Yeah. Also, if you look at the 114 level, you've got a few pokes through here with the tails. This tail here, I think the low was 113.71. So it's that 114 level that really, really needs to be taken out, in my view. If we do take out that level, I think that would turn things in favour of the euro bears. But one thing I often get asked is, if that's a key level, why don't you wait for it? I'd rather have an aggressive entry because I just think the euro is so overbought, and do a couple of trades. So I've got the opportunity to take one out, maybe into the level, sell the other side, or even take both out. I'll explain obviously what I do when I do my daily charts in the member centre. Just want to see how the price action obviously unfolds. Right, now 114 gives way. Where are we going then? Well, we should go back to there. So really 112, it's obviously this big breakout here. They would be the levels I'd be looking at. Obviously I'm looking for it to run down further longer term, but if it got to 112, I'd be more than happy. In terms of momentum, I put it on the chart. Overbought stochastic, but it's chopping. It's of no other use to me than just to show how overbought the euro is. Same with the RSI, flat above 70. So just gives the indication of how far we could go to the downside. What didn't mention it earlier, obviously, you have got on the CFTCs, commercial selling coming in, big speculators buying. I'm really just using that as a backup factor. It's not the reason for me doing this trade. They're not extremes at the moment, but it's a supporting factor. Personally, I think the big fundamentals of the interest rate differentials and the fact that we have got bullish sentiment should bring the euro down. So we'll see. That's my review of Euro USD. The Euro Japanese Yen daily chart, and just before I draw some levels, I just want to look at the CFTC net traders because they look interesting to us this week. Non-commercials, sorry, I've actually spelled that wrong, haven't I? 6.2 to 1 in terms of longs v shorts are bullish, and they've added in 22,000 contracts this week. Commercials on the other side, 6.4 to 1. In terms of shorts over longs are bearish, and they've added in 24,000 contracts this week. So speed up over last week. Divergence moves between the groups to above 10. We like divergences above 10 to 12.6. Now, in terms of the chart, last video we did said, we thought the breakout above 130 would fail. It did. But we sold. We had to come out because we just didn't clear the 129 level. And the day I had my eye on is the one that we've actually highlighted there. We'll put the BOJ ECB candle. because what we had was the Bank of Japan market seeing as very bearish interest rates, and of course we saw the ECB. Traders saw them as really bullish, so we pushed off to the upside, but we only got to 130. We've elected to come back in through the 130 level. Now, from our perspective, this candle here looks a really good reversal candle. Yeah, we could test it. I don't think we're going to decisively take out the 131 level. So from our perspective, it would be a sell back to that level, but we really now need to take out 129. We've obviously got the 20 days snaking up, got some tails here. Yeah, we just really need to see that taken out. I think give it a little bit more room, 128.65. I think that then will crack the trend in favour of the bears. They're simply coming short. It's an aggressive entry. Again, running 2 trades, so we can vary our exposure into the level, maybe take 1 trade out, sell back in the other side, bring our stop down, or take both trades out. Again, we'll see how we go. But if this level breaks, I just feel we're going to be going down to 125. Okay, from our perspective, that is the level. That's the big breakout. This is the level we should target. Divergence between the groups for us is really good, and I like the fact they've speeded up, and they speeded up into 129. Non-commercials, in my view, probably don't have enough power to take out the 131 decisively. And also what I like about trading the euro-yen, I actually prefer it to euro-USD. The stock markets have been relatively strong. That should be really hurting the yen. It isn't on the euro. I think we've got the potential for some risk off next week. Any correction in stocks, doesn't have to be big, I think will help firm the yen. So I really like the look of this chart setup. So we shall see how it pans out. We'll come back off that short view there to Forex pairs. That's my view as of right now. Obviously, it can change in line with the market conditions. If you want our full Forex course, full trading techniques, and of course our daily technical analysis of major Forex pairs, simply click on the link beneath this video. Now, what I want to talk about now is probability of trades, expected payouts in relation to a trading edge. And all experienced, successful traders understand the concept, okay? Most beginners don't even think about it. You need to consider it if you haven't. It's very important in terms of helping you become a successful trader. Now, just in relation to this, what I want to do is give you a quick summary of probability and expected payouts, and it comes from Nassim Taleb, one of my favourite traders who wrote the fantastic books, of course, The Black Swan and Fooled by Randomness. I'm just going to show it to you. Only take about a minute, then I want to come back and discuss it in more detail. So here is the summary. We'll get back off that short summary there from Nassim Taleb on expected value and probability, and also put a little bit of a conclusion in with prospect theory. If you're a beginner coming in the markets, go and look up prospect theory, because it just shows how risk averse we are as humans, and basically how we hate taking losses. I've actually done a video on it, which you can look up on our channel. But I think one thing that separates out successful traders from amateurs is knowing their system or strategy's edge in relation to probability and expected payouts. It's not the probability of the trade that matters. It has to be seen in relation to the expected payout. Now, when I say, I'm looking at high probability trade setups in my view, that's in my view. The market view might be different, okay? And very often when I do this, I know I've got a high probability of being stopped out. But if it goes in my favour, the expected payout is fantastic to my risk. Trade, if anyone looks in our member centre, you can see the trade I'm risking the most on, and you can see that the market is just generally against me in my view. However, my expected payout, in my view, I've researched against my strategy, if I get it right, is probably about 3 to 1 or more. So I don't really mind if I'm stopped out because, I'm looking at the expected payout as well as the probability. Okay, so I think, do some research on it. And if you're a beginner, you'll just see your losses in a different light. If you're trading in a probability based market, you are always focused on the expected payout of your trade. You're not interested in being right the majority of the time. You're just interested in the risk to reward the expected payout against what you're risking. I think, once you get into that mode of thinking, losses will never really bother you. Well, they always bother you. No one likes losing. But, you won't get frustrated and you won't get angry at the market, which a lot of traders do. Right, that is my summary. And that is now the end of the video. Thanks for watching me as usual. Take care. Have a good day.